Hi, it's Uroš Marković with the Real Estate District. And if you have been wondering what is actually happening in Calgary market right now as we head into spring, March data give us a very clear answer. So let's break it down. Let's start with an overview. March gave us a very clear read on where the Calgary market is heading. We had 1,881 sales. That is up from February, but still 13% lower than the last year. So yes, activity is picking up as we move into spring, but not at the same pace as we saw the last year. If you zoom out, January was slower, February improved, and March continued that momentum. This is not a hot market, this is a market rebuilding, but with some resistance. So now let's talk about inventory story. What is really changing? Supply? Well, we are now sitting at 5,395 active listings, and inventory has been rising month after month. Months of supply is at 2.87. That is enough to shift the market, not dramatically though, but enough that buyers are starting to feel it. And here is the important part. Supply is not evenly distributed. Detached homes are still tight in many areas. Apartments are seeing much higher inventory and row homes are building supply. Semis are sitting somewhere in the middle. So, buyers have more options, but only in certain parts of market. Well, now let me paint the pricing picture for you. The benchmark price in March is 565,600. That is up slightly from February, but down over 4% compared to the last year. So, what does this mean? Prices are stabilizing in short term, but still adjusting from last year's peak. And when you combine that with rising supply, you start to see where things are heading. How the properties compare? This is where the market really separates. Let's break it down. Detached, this is the still tightest segment, about 2.2 months of supply. Benchmark price is at 741,300. The stronger areas are west and southeast. The softer areas are northeast and city center. So, if you are in the right district, demand is still there. Semi-detached. This segment is very balanced. Benchmark price is at 686,100. Stronger areas are north and city center, and softer areas are northwest and east. This is probably the most stable segment in the market right now. Row homes, well, this segment is starting to soften. We are close to 3 months of supply. Prices are down about 6% year over year. Stronger areas are south and city center, and softer areas are northeast and northwest. This is where competition is starting to build. Apartments, this is where the biggest shift is happening. Almost 5 months of supply and prices are down 9% since the last year. Stronger areas are south and west, and softer areas are northeast and east. Buyers have true leverage in that area. If there is one pattern to pay attention to, northeast consistently showing up as the softest district. South and west consistently show up as strongest. The gap is important. We are at the advice segment, so let's talk about what this means. For sellers, you cannot rely on market to do the work anymore. If you are in a strong segment, especially detached in right area, you still have opportunity. But in anything with more supply, pricing and positioning will decide everything. For buyers, this is where things get interesting. You have more choice now, especially in apartment and row homes, but the best properties are still moving. So this is not a slow market, it is selective. For investors, this is probably the clearest opportunity right now. Apartment inventory is high, prices have come down, negotiation power is improving. If you're looking at long-term holds, this is where I would be focusing. To summarize, as we move deeper into spring, the market is not slowing down. It is becoming more precise. The difference between selling and sitting, between overpaying and buying right, comes down to positioning. If you want a breakdown specific to your situation, your price range, your property type, your area, reach out anytime.